Uh, Sorry, guys. I was trying to put up. You're welcome. Okay, so can you hear me now, please? If you can hear me, just type one on the chat box. Sorry for there was little interruption. If you can hear me, type one on the chat box. If you can hear me, just type one on the chat box. So we're hunting for a market now. So you can hear me, type 111 on the chat box. Good morning, good afternoon, good evening. Can hear me, type 111111 on the chat box, everybody. Can hear me. Thank you very much. Thank you very much. All right. Congratulations. Those of you who attended our live session, PBS Club member in the night. I'm sure the trade workout and it's still on right now. Just as we said, that the market was going to, I think I will just take a little thing to address some issues around that. I love that the market was still on the screen. Yeah. So the market was actually um, like we always say, when you have to do with the market, what you need to look out for. Uh, so, market is lovely if you can be patient. Uh, like we always say the challenge is patient. Patient to wait for your market to come to you. It's a very big problem, and so you just have everybody have to just develop an antidote against impatient. Very very important. Okay, we need to develop an antidote against impatient. If not, it's going to be a very big problem. Somebody was chatting with me about his trading, and I said I was going to fix his problem if he can be attentive. Okay, so let's go to the market quickly. Let me just show us looking at the market. I think today we're going to trade sessions because we have been teaching us sessions, and so it's going to be helpful for many persons who probably have just been hitting market anyhow, and the waiting is the trading. The waiting is the trading. If you cannot wait, you are actually not trading. You are gambling. That's the truth. Okay. So the waiting is the trading. And so there are a few things that we don't pay attention to. So I quickly have to address one or two things that I've always been talking about. Okay. So our forum, please understand, we're not hyping things. Okay. I want you to please be attentive and understand something that we don't hype things. We let you know. If anyone tells you that trading is actually uh, easy, it's not. Why is it not easy? Trading itself is sweet, but our activities, our practice in trading make it very difficult. How many of us are actually disciplined enough to be patient to wait for the right time for the market to come to us? That's where the problem is. Okay, Lawrence, how's been your experience on the training? What have you learned? What has changed? Can you give us your experience? Just type it on the chat box. Lawrence, what has changed in your approach to the market? Has anything shifted at all? Those of you, about six of you, are indicated for the training, and then it is after you guys are done that we're going to have uh, interaction together. Maybe Friday. Okay, I think Friday. I'll tell you no good. It will be around. So it's going to be question and answer. There are about six of them. All right. So they indicated interest to learn, and then it was supposed to be a paid training. But when I was overwhelmed with the number of them who just indicated interest, I said, okay, these are really ready people who want to go far. And then, so Lawrence, can you tell us? Can you hear me, Lawrence? Can you type what has been your experience? Has anything shifted from your approach, from what you used to think or know in the market? And have you followed into the detail of both the script and the training clips? How has it been helpful for you? And what's your perspective now? So you can just type it for us to see. Okay, so let's look at the market. I was telling us in the morning, so this market is still going to go up. We're talking about the dealing range of this market. So let's find a market. And there was a market I told us that we're not going to take. I only took it because of, and I told us that the market was going to be a little bit dicey, and it did. Why was it that? Why did it go dicey that way? The point is this: the market was there was a news coming on that particular PS. I told you guys in the morning, which was AUD. So AUD was having news by 5:30 a.m. in the morning, GMT plus one or something like that, or the 4:30 or something, right? And it actually, I think it did. What is the same thing? Okay, so I think the news was a little bit clumsy, and then some were negative, some so they were eventually neutral, and so a lot of people lose money. Okay, a lot of people lose money because they don't know what to do. Okay, so now let's quickly go to the market, and that was why we waited a little. Okay, uh, before we go for scalping of gold, I think gold was presenting a buy. Since gold have been struggling here, but it's just in a base of support. But in our base of support, I took a trade there, although. So let's look at what we actually ask us to buy in that money. We put a line of entry. What's going on? Network? What happened? Let's quickly look at it. What's going on? Network? Oh, come on, come on. What's going on? What's going on? What's going on? So I have a very bad reception here. I don't know what's going on. Shoot from one fiber to another fiber. Okay. Switching from one fiber to another. Okay, I think maybe Lawrence was not hearing us. Okay, let's quickly go to the market. So we're just looking for a buy, an entry. So lots to look for a buy, a sell. So I said, let's look at gold quickly. I think we could catch a fast move there. That has actually moved. So on a good day, this is the daily time frame. This is how we use our scanner. So this is how we use our scanner. So let's say before the so this is how we use our scanner before this guy come, before the New York session come. Okay, so this daily time frame. I told you that this candle was not a good one, though it swept the low here, here, here. All this low were swept, but that was not a very palatable one because the market will not have a clearer direction. That's one of the things you should bear in mind. When you don't have a good momentum candle for the previous day, right? That should either clear. So what is even struggling in now is like maybe finding a support is because at the base of those ones. So, but you have to be very careful. So go to 4 hours. 4 hours and 1 hour are just what to help you for the structure. You're a day trader, intraday trader, scalper. Yeah, 4 hours, 4 hours, and okay, 4 hours and 1 hour was going to form a nice structure for you. So I'm not there here now to do all of those detailed uh the structure and all of that. So one of the lovely things I told you guys about this scanner is that it did have a means to give you uh, a structural trend, both in additional indicator like to 25 50 moving average, or you can change it to any moving average you have love for. So this a buy was going on, and I told them most people trade gold, they just want to stay on the higher time frame. You may probably not find an entry on time, so look at this when there's support. So this buy was not a good buy. That's why you see that I still struggling here on this wire. I told you about a buy, then we'll have got that. So let's go to 1 hour. Here we are on 1 hour. All right, so 1 hour we had the sell. For anybody who was smart enough, when this sell showed up, you go for 5 minutes, you will be able to have a nice sell down, right? Go to 5 minutes, you will be able to have a nice sell down. So I'll go to 30 minutes quickly. I just want to find a sharp entry. We'll have gone to our usual pips level. That would have been a nice one. So on 30 minutes already, it was still a very nice sell. Then let's go to 15 minutes. Now I told you if you're a scalper, 15 minutes you're actually trend whatever. So let me take off this. So your 15 minutes, your trend, overall trend direction as a scalper. Then why 3 minutes, 5 minutes, 1 minute are actually your internal and execution. So let's look at this 15 minutes. Now this kind of this send this signal. So that means you will have been in buy all this while. So probably we have to just go to 3 minutes, right? So let's quickly look at it because I just wanted to find a trade as fast as possible. Then we can do analysis on some of that instrument quickly or even gold itself. So check on 5 minutes. If it give you a very good fast entry and a very perfect confirmation entry, this is not a confirmation entry. That was a very rough one. But proceeding from there, you have a followed one, powerful one. This is OJ. I don't know, maybe OJ is in the call. All right. So that was OJ. Oh, okay. Okay, so I was saying something about I'm sure my screen is being seen now quickly. All right, so I'm talking about the gold that on daily time frame, we had this candlestick. That was not a good one. If you even see it, it closes below the previous day. So we're supposed to be bearish. The only little challenge we had was that the market actually cleared the liquidity, but that was a powerful reversal. So, right? So the market was not going to be very directional. So you are careful. Any market I want to trade for the day and it does not have a very good direction, I'm careful about it. Maybe not to even get into such market. So from that daily time frame, we go to 1 hour. So your scanner is going to give you a nice entry. So in 4 hours, we already seen a signal. This signal is not as powerful as this one. There was no momentum. The next candle closes below. But before the candle even closed, this as it popped up, we said you should go to 15 minutes or from 1 hour. So from 4 hours. So if it's 1 hour, so this is a old one. So we're looking for an entry or a trade back here. So go to 1 hour. So on 1 hour time frame, so remember it's still a structure just like call it for me, like 4 hours. So here we come. So we still have a sell signal. So we were 30 minutes, so we'll go to 15 minutes straight away for scalper. So why do we go to 15 minutes for scalper? We got this signal, 15 minutes. We say, okay, the best is to first check it on 5 minutes. It could give you a refined entry on 5 minutes, but this is not a refined entry. This is the mistake most of you make. You say, oh, the signal had this issue. No, 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 no. This is not a refined one. All right. So what do I want to do? I probably want to go to a lower time frame or take the next Remember, it built around the power of 3 because this had actually swept liquidity, and then so it will have this buy. So the best will be 3 minutes, 1 minute for you to find a quicker entry and then with maybe nice momentum. Can you see that? Here we got it. Now, so 3 minutes as an internal structure of 15 minutes, that will have given us this. So as I see a signal on 1 hour, or sorry, on 4 hours, my journey is to go back to call it for me, is to go back to 3 minutes. Okay. So my journey is to go back to 3 minutes to find the internal structure and be able to find a sniper entry. And that was what really happened here. So we're going to wait. So ordinarily, that would have been a very nice one. This is a very nice setup. It's a very nice one. All right. Retest back to the support. That was another one, but this is not a fantastic one, probably because you want this candle to actually engulf this. It didn't happen, so you waited for this. Okay. So, but by the time you move down to, let's just quickly check something. Okay, I've listened to a lot of people about trading. Yeah, I said from the beginning, I said trading is not what you think. Trading is a career, it's not gambling. If you're gambling, you may win this one, you lose this one. Why are we not losing when you are trading as even a professional? Yes, why don't you lose? You lose. Your market hits your stop loss. So it's part of it. Anything can happen. All right. So it's not, and you don't have an antidote for market hitting stop loss. No, no, no. You don't have an antidote for that. Okay, you don't. So you see his stop loss and all of that. But I only tell some persons, I said there are win you win is a bad win. There are lose you lose a good loss. Because you can give account to what went wrong. Then when you win, you cannot account for how do you win? How come you arrive at that? That's a very bad one. That's a bad win. For the fact that you made that profit, why is it a bad win? You are just a mile to the next loss that's going to lose more than the amount you made that you are jubilating because you can't give account. All right, you can't give account on how that win come about. That's the funniest aspect of it. So you can't give account to how the win or came about, and that's one of the things we always tell people to be careful and then not gamble market. So now, if you look at it, this was a very nice one. All right, now why the other scanner is powerful, but this is universal. This scanner is universal. It's for all instruments. It's for all traders. It's for all time frame and all of that. Now, but the other one that will have this psychological level, it's strictly for gold on scalping. Now, look at this market. Look at this market now traveling back up to where? So probably look at the resistance coming here. So if you take this market, we now said what you should target is 50 pips and all that. But if it's a normal trade you are trading the 1:2 risk reward. Now, sometimes when you take this trade here, remember we're looking for a trade, but I'm giving you some examples of what has happened. Now, if you take this trade here, not by this candle, but by this candle, now your stop loss below here, for instance, let's just start. Now you're targeting 1:2 risk reward. That should be here. Now, the market return back here. You are scared? No, that's wrong. Instead, when the market return back and give a confirmation for this return advancing up, you are adding to your position, stacking position from here because this is a formation of 3 weeks, 3 candle close. So going to 1 minute, probably. So remember, we're looking for entry. So look at the 1 minute. This accumulation manipulation. So your entry was quicker. And then continue a pullback. So the market, so this pullback, right? This pullback. And what we say is that once you have taken a trade on your 1 minute, except for the fact that you see that, okay, so let's this candle close, we'll be selling. Let this candle close bearish, we'll be selling, okay? So, but let's look at it. What did it react to here? If you're just a subscriber of this scanner, we don't teach you to this extent. You just need to use your scanner. That's why if you're a PBX club member, you have access to a lot of things. Okay, so you have sold, so sell and put your stop loss. Now, this is where scalping of this thing come nicely. Because I said, when this candle close was your entry, your stop loss can be above this resistance, that's 72 pips. Now, if you are working by scalping porter, if you are working by our scalping rule, so at least this is 50 pips. That means TP1 should be taken here. That's why sometimes a signal is sent to you very short. TP1 should be taken here if you're working by scalping. right? If you're not working by scalping, then look at this is support level. That's 1:1.91 ratio. Then 1:1 ratio, okay, 1:2 ratio, that will be here. That means you should be taking profit at this level. Now, because as a scalper, you have taken a trade, right? Now, once he has done 50 pips, maybe you as a scalper, you probably want to be taking a partial profit because this is scalping, ladies and gentlemen. So if you break this now, you're looking at this down here and all of that. Okay. So by the time the break continue to go more, maybe you will be able to stretch further down, and then you now go back to a higher time frame, maybe 3 minutes, 5 minutes, 15 minutes to see a stretch more of the market. The only little thing you have now is that when the market's about to open for a new session, we have to now trade full length trading and all of that. Okay, so you ask me, fellow, why do we take this? This is still lower, this is still lower, then this is the scanner. Now, most people tell me, oh, the scanner, I do not understand and all of that. This scanner is simple to understand, except and unless you are not paying attention to instruction. It's very important. And if you look at it now, how many pips is the lot size? That's about 72 pips. Is the stop loss pips is about 72 pips. Let's call it 75 pips. We now say, okay, if that's the case, you come back here and look at how much do I want to put into the market? 5% of my money? Oh, yeah. Okay. What's the loss? So 75 pips. Okay, calculate 0.01. That's what you can do. 0.01. So it's the stop loss size. The stop loss size and how much you want to spend that will determine your own lot size that will be engaged. And so if that's the case, you have engaged that. That means if the market hits your stop loss, you are losing $10, not more than that. So if the market pull back, it's none of your business. I know some of you couldn't enter early because you have not been familiar with how we take trade. Some of you enter the trade here. But for anyone who enter from here, for instance, let's look at it. For instance, because as a scalper, you are catching just little move in the market. So that means for the people who entered, daily time is already 30 pips. So I think those to this point here will have been 56 pips, thereabout, and all of that. So, but let's see how it works. So that's how the market is. So if this market is running down, please just pay attention to it because I didn't open the pips level, which is the psychological level that you will see layer by layer of the psychological level come on. So let's go to the other market. So please, if you enter this market, just monitor your trade. Maybe get to this point, you take your profits and then allow it to run. So because what we do, if we come like this, we want you to take and get a trade. Okay, so now let's go back to other stuff. So let me go back to higher time frame, 5 minute time frame. Let's go. 5 minute time frame. Do I be waiting here? 3 minute time frame. As a close here, so 1 minute time frame was why you were able to get a sniper entry, right? Okay, let's go back to which instrument is the Euro USD. So let's go to 15 minutes. All right, so let's go this way. Why do we took this trade in the morning? Those of you who were here, we narrated this. This thing I need to explain to some of you. So look at daily time frame quickly. So we talked about this market yesterday. Overall trend of this market is bearish. Okay. When I say okay, this market is bearish, a breakout structure down here, you expect a pullback. If you are working by this external structure, this is like a market structure shift. So if you're working by this external structure, then you should be looking at something like this. Whatever the market get down to this point, that means we have some way to go back up to an extent. It's a bit dicey. So with that, we say, okay, let's go to 4 hours. and we got to 4 hours, something very significant happened. Look at the 4 hours. This market, this is the structure. And then we said if you're confused about the trends of time, either you are still downtrend. If you take your 50 moving average, you see the market is still below 50 moving average. So these are the things that this scanner does for you. So if you don't know how to check and all of that, so you can see how the market actually behaves. So we're a little bit sluggish right now because we're close to a session to open. Okay, so if that's the case, so I'm going to take this one off. So what do? We look at it. This is a structure. This is a breakout structure. So if you walk by the 4 hour time frame, yeah. So you take up this to this low here. I mean, you expect the market to return back at least to an extent. But this is something very fantastic that happened. One fantastic that happened that make us to say, okay, this trade. Now, this was yesterday, so you want to work out your own today. Because if you're working with yesterday, people will have taken that trade. You can't take that trade. People are already taking it yesterday. So for that, we step down to 1 hour. 4 hours, 1 hour, your structure. But when you have a very nice setup, buy setup or sell setup from 4 hours, is sell longer or buy longer. Or 1 hour is shorter than the 4 hours. Simple. Now, this scanner here, we got a buy. We got a sell from here. And then we said, what am I supposed to do? You get a sell on 1 hour, you step down on 5 minutes to find a sniper entry for the sell. But before then, something has happened here. If I take up all of these, your market was coming from up here. Look at this high, created a low, another high, right? This is a low, all right? This is a high. Now, in this high, low created, we have the lowest here. Excuse me. So look at the established lowest here. This is the lowest. Now, this internal structure may not be captured, but that's a high. Now, there's a high here, there's a high here. So now, with this high, shows that, oh, if we have a low here, we have a high here. What do you have? This is a move. This is a breakout structure. And this structure, when the structure was getting broken, there's something that happened significantly. It has another block here, left behind untouched. The market created this. So very simple, right? You're working by your structure now, your market structure. Now the market, this is a low. You see another L here. This is a low. This is a low, but this is a higher low, higher than this low. Then this is a high. So if this high, what you only wanted is a shift because this market have been selling all you care from up. Excuse me. So since we're selling from up, then you want a break above this. Lovely enough. The market what? Broke. So in breaking this is what called shift, market structure shift. So pay attention very quickly. Now, market structure shift is shifted up, meaning that I'm changing direction. I'm no longer going down. Do you get that? Okay. I hope you are monitoring you're monitoring sorry, your good. Okay, so now let's go. It should be selling gradually, right? I think so. So now you have this, the market went up. Now it created this an induced or engineered liquidity. It went up. So because this is not a swing high, this is not a swing high, it now got a swing high here. Look at this high. So if this high was created, that means we have what is called dealing range. From this low to this high is your dealing range or 1 hour time frame. That's your dealing range, ladies and gentlemen. Just a moment. Sorry, guys. How's our gold? I think people have taken you are enjoying money, so you don't go tell them to pay title. you know, you know, you know, go tell these our people to pay tight. They should pay tight. Somebody say you cannot see what stop loss, but you enter. You enter, right? Chinelo, you enter. You didn't see stop loss. It's not a problem. So you can take profit now. Either you see stop loss or not, you can see, you can take profit. Okay, so now, so in that money we did this. This was very simple. What do we do? Look at it. A low, a high. This is a structure. And your market again have already supported it. So you have another low. So we say, okay, market here. So this is my daily range. From here to this here is my daily range. So I take my Fibonacci retracement from this low to this high. So when I did that, that was when we got this block here. I will tell you in trading, what do we say? If you don't know where the liquidity is, you are the liquidity. So one thing we say you must understand and must learn is your PDRAs. What do we call it? PDRAs. PDRAs. That is your premium and discount areas. Your premium and discount area. So if I'm buying, I should look for discount area. If I'm selling, I should look for premium area. So this is a discount. So you expect the market to come down here. Now, this place here, this point here is a liquidity. So this is more powerful. Why is it more powerful? We have a liquidity here. It's an induced liquidity, or you call it inducement. This is a liquidity, an induced liquidity. Make more sense. This is a swing high, this is a swing low. So the market has traveled up. What did I told us in the morning? I say patient, wait. Wait for the market to travel back here. So, but with that said, in this area, and we marked it, this area, what do we expect? We saw a fair value gap, see a liquidity, see fair value gap, see another block. This is extreme. Okay, this is what? Extreme. What they call origin. This is the origin that produced this journey to this point. So the market will do what? The market will revisit it. So, but market is already being fed by sweeping this liquidity and tapping it into this fair value gap. Because this fair value gap, I told you here, look at it from here. We have two fair value gap here. So another one. So if you block everything, they are wide. So, but the most important aspect is that they are already inside your region. So we waited. So what am I going to do? When the market traveled to this point, am I going to take trade on 1 hour? No. I need to wait. Excuse me. I hope you guys can see hear me, please. If you can still hear me, okay. So on our channel, we don't just tell you to trade, we show you why. And that's one of the things you should learn. Now, when the market traveled to this point, we go back to what's the external structure for 1 hour? 5 minutes. If you are watch my video on the time frame and sequence, okay, look at what happened. So your scanner is powerful. Many don't know. This your scanner is so powerful. We'll come to 5 minutes. What do you have? Let's enable our sniper entry call. Now, How many things confluence together here? Number one, you have already marked this place as an area of focus, what they call point of interest. The market traveled there by void. All right. And what did he do? Accumulation, manipulation, and distribution. So this is your entry. You don't need to call Felix. You don't need to call Inogold. You don't need to call any of us. Neither do you call Precious or Noah. Don't call any of us. That because we want to build people that can have confidence in what they are doing. You know, this place is powerful. This place is very powerful. So the market come down to this point, then you are in. Put your stop loss and all of that. Sometimes to be safer, sometimes to be safer, since you took in the trade, look at it. Since we took in this trade in this fair value gap, so sometimes people give their account a buffer. What's the fair value gap? Write it down. The candle that bring about the fair value gap. How is fair value gap formed? Three candles form it. You have a candle like this. You have another candle like this. You have another candle like this. So this candle prevent these two guys to meet. So this guy has refused these two guys to meet. That's what we mean by imbalance in the market. So, so who fill up this? So the market left the place in a hurry, and that's why we call it inducement. So the market was being manipulated. So no balance. The book was not balanced. You can see why how powerful an imbalance in the market attract. It's a magnet. So we now said, okay, the market need to revisit this place. And one of the lovely type of revisiting I have is that if there are liquidity before that place, it used to be very powerful. So you sweep and they will tap into it. If there are liquidity sometime, it can fill it and even tap into the other block. So, but there's liquidity, it fill it, just tap into it and then remove. Now, not just because tap into it. So when I say, you see this candle, this center candle, wherever it start from, that's where you're going to put your stop loss for a buffer. So that means if you look at it, this candle here, that's the low of that candle that formed that. So your stop loss below it. So, but for snapper entry trader, whatever give them the signal, which is our signal, this your sniper calls. Now you don't just jump at every call, but this is a powerful one in a significant area. Remember, I was saying the three pillars: where, why, when. Where is a narrative context? Where will this market return back to for me to buy? Very simple and straightforward. Where will this market return back to for me to buy? Where will this market return back to for me to sell? Oh, it need to return back to my PDRAs of the discount or the premium. If I'm buying, it need to come to my discount. After all, why will I buy it? Is very expensive because I want to sell. So I need to buy cheaper to sell expensive. So for that, I buy cheaper to maximize my money, to reduce cost. And for that, I'm buying at a discount. Oh, that is where. All right. Context. It become your area of focus. It become your PDRAs. It become your, what the smart money called POI. So in PBS, we call it AOF, area of focus. It's actually an area. It's not a point. So for that, you wait for it. And it has come there. Oh, wow. It's not in that area now. What should I do? Okay. Why will I take this trade now in that area? Oh, because, this area is serious. So it has so many conflicts. There's a fair value gap. There's this and all of that. These are confluences. And that's the factor. We call it a factor. All right? A factor responsible for me to actually treat this as an important area. Oh, it's now there at the fair value gap. Okay, when should I strike? That's called precision. Strike at this point. When? Exactly when you see PBS scanner appear. That is sniper call appear. And every sniper call had a validity. And what's the validity of every sniper call? Our sniper call valid on two major occasions. And we have told you before. On two major occasions. Because our sniper call does not appear anyhow, anywhere. Take note of that. But once it appears by confirmation that you must take our PBS R2. You must take our PBS sniper call on two confirmation majorly. On what we call CISD or three candle formation. So I have to use it in layman language. Three candles formation. This one to a layman is difficult, but let me use a layman language on this one. Forget what smart money will call it there. To a layman language, it's called engulfing, but it's not all the time you will understand it. It's called engulfing. Forget those big English. You know, all of those things that are being renamed, they are being, but it's just that you don't know what probably they are. So whoever give it a popular name is the one that okay, have there not been break of structure before? But if people are trading that, when you hear BOS, where do your mind go to? Smart money. But they have been. It's a price action. But when you hear BOS now, your mind go to smart money. When you hear change in state of delivery, but that's engulfing. How do you mean by that engulfing? Because these three candles, this three candle formation, another name for it is what we call what? Power of three. Ooh, a session has opened and I want us to trade a session. Okay, power of three. PO. So look at it. PO3. Power of three. All right. What do you mean by power of three? First candle, second candle, third candle. But listen, every candle is a power of three. Every candle is a power of three. So now, if that happens, you have accumulation, manipulation, and distribution. Now, if the third candle did not close positive toward the direction, but better still should close bullish even above the candle that manipulates, it makes more sense. Then you are in. That's the confirmation. Now you can now see now this is a big confirmation at the fair value gap. You reacted this way, you are in. Your stop loss, you are good to go. And that's how we traded this. I don't know how many people either they enter or they have not entered. You ask me, Felix, have you closed all your trade on this? I hope people have taken your profit on gold. I should believe that. Have you closed all this trade here? No. Why? I did see into my market. I told you guys, those of you who are on PBS Club, I sent the message. I say this is the time to take partial profit, and I adjust my stop loss. So I have not checked since that money. I have not gone there. I don't know what the market is doing. I have not gone there to check. It's none of my business. If I'm funny enough, that remaining one, I didn't put take profit. I only put stop loss, which I have trailed. Guys, why I'm doing this is that because you have taken a trade and all of that. See, this trade is running now, right? You can see we're having more of support now. We're having more support now. So if you go to 30 minutes, and I say, once you have taken your trade on the lower time frame, you don't stay there. You expand, you come up here. So you can see now it's looking up to this point now as another resistance, another major resistance, perhaps. Look at the break here. Look at the break here. This is a break. This is a structure, break of structure, right? This is a break of structure. Look at the high. Look at the low. Look at the high. Now look at the next high here. And look at the next low. So is targeting, so still moving up and all of that. Have I closed? No. Then you go to 1 hour. So the same thing. You can see the market. Probably you can see the market now that, okay, so it's now targeting this point because this is another pivot point. Now, it may not take time to rule out this. It's not as trending as this. That's how you trade, and that's how you make money. So let's quickly go back to gold. I'm sure it delivered as expected, but you can see that it has a lot of strength supporting the move. And this is the thing. One of the lovely things about gold, it has a lot of volume that you can capture every time. You can capture the volume every time. All right. See the market we just sold now. All right. There was a support here. It came there, and they give you your money. And so we went on 1 minute. That was how we were able to take that trade. And now on that same 1 minute, do you see something? So let's take off this because you are scalping it, right? What did you see now? So for anyone who took the trade, because some of you didn't take the trade on time, for whoever took the trade, let's see how many pips you actually did. Those who took the trade on time, we were saying here, that's about 85 pips. Now, for those who didn't take the trade on time, will have no, let's look at it. You didn't enter here, you entered here. That's about 67 pips. Then if you waited here, that's about how many pips? 80 pips. Now listen, most people wait on gold. If gold has done 80 pips for you, so is it big? It's very big. I don't scalp other instrument. I only scalp gold when it become choppy or something. Because look at the gold here. Look at the same gold on 1 minute. Look at the buy here. This is a scanner. This is sell, buy. And then you waited because this was not giving you effective momentum. Then until you even delivered this, or you even waited for this momentum because this was long, and that was what carried this the signal, this return, and then perhaps here. For others, probably we entered here, the stop loss below here, and then if you want to do 1:2 risk reward, well, already okay, but this is 1:3 risk reward. Just spending about 54 pips to make 160 pips. Oh yeah, you heard me right. 64 pips to make 150 pips. So this now happened. This was not a good momentum. It tried, but it didn't cover. The one that's more powerful, call it A plus setup. Look at this one. It's an A plus setup. This one was an A plus setup. This is not an A plus setup. It's good, but it's not an A plus setup. But this one is an A plus setup. What's an A plus setup? When the signal, the candle in the direction of the signal is engulf the signal candle, then that's an A plus setup. This is not an A plus setup. It may deliver, but that's not an A set plus setup. So that means another person will have to wait for this candle to close and then take the trade, ride it up as it were. Do you get that now? Okay, so that's a simple thing. So let's quickly take off the scanners and take looking at session because I think we're in a session now. Now let me show you something about sessions. Now when you trade sessions, so let's go to 15-minute time frame. Now, so please, every time we come for to take trade and all of that, always learn because it's going to help you, to be independent and make more money. So let's look at it. Markets, it's about everything about market. If you want to learn advanced market setup, you have to, you come to our ecosystem, you ask the support at me to tell you on one-on-one mentorship on how to become a professional. At that point, we'll be teaching you about market cycle beyond just like normal structure, market cycle where you're going to be looking at fractals by fractals of the market. You project into, we're not bragging about that, but it's a very fantastic thing where you're able to learn and understand how about you can project market to where is it going to the next 6 months. So you would love to be there, and then that's how trading is simplified. Now let's quickly look at the market. Market is, just like smart money's concept have said market. So in PBS, we say market is this, CED. So which is direct interpretation for CED, contraction, expansion, and delivery. Now, in smart money, it's called AMD, accumulation, manipulation, and distribution. I don't like the word manipulation. I don't like the word manipulation. So I love to have a different language to call it. Because by the grace of God, I'm too defended to be defeated. So we have God that will not allow us to be manipulated. Good is laughing. So right. So we have contraction, expansion, and delivery. So if that's the case, that's what market does every day. Today is Tuesday. Market is supposed to be expanding. But then every day, so all these things were still picked from candlestick. Because candlestick does these three things: contraction, expansion, delivery. Contraction, expansion, delivery. So the market now by sessions, contraction, expansion, delivery, which we have into different sessions. New York, Asia session, all right, Asia, London, and New York. Okay, if we take by that, let's look at it. Majorly, we have Sydney and all of that, but let's just take the Asia in move. So If you look at my market, if you trade, if you are in GMT plus one, other people use New York time. I use Nigeria time. So that's London GMT plus one. So GMT plus one, if you look at your trading view, you go to the bottom of your trading view like this. If you use the system, so you click on it, it will pop up. You see different time zone. So different time zone. I scroll to UTC plus one, Lagos. Right. So I will know I'm working with my time. I will not be changing here and there. Okay. So now let's go and look at this market. So today, today is let's look at today. So today is 17. So when we look at the Asia, so we look at midnight Asia, 12 a.m. So I box it. This is what I do. If I don't want to use any indicator, you can get it by yourself. So to 8 a.m. Nigeria local time in the morning. Okay, so this is it. I put this so you can see gold actually expanded in the morning. This is Asia session. This is Asia session. So Asia session actually moved very well. So now most time, if you check Asia session, a rip yesterday high. That's what happened. A rip yesterday high. But let me not go into those details. But a rip yesterday high, that means you should be selling from here. So because yesterday high should be somewhere here. If you look at it. So a rip yesterday high. So if you rip yesterday high, lovely, no problem. Then we're looking at what's London going to do. You can see that the market is very choppy. It's doing nothing. If you don't have a scanner or you don't know how to go into lower time frame internal structure, definitely you won't try to enter gold. But what did I told you people, those of you who have learned from us, we said the market is going to be confused today on gold. So why are you surprised? You shouldn't be surprised, right? So ordinarily, if I'm not scalping gold, there's nothing that will make me to trade gold today. Right? Right? So that's it. Okay, so now coming back here, this is high of Asia, this is a low of Asia. So I would say we trade market in fractals. Liquidities are fuel for the price. Previous day high and low, previous day high, previous week week high and low, then session high and low are powerful liquidity. The market go grab and then deliver. So now the market is here. Now, what sets the high or the low for the day is actually what? Okay. I hope I'm still being heard because okay, thank you. You guys can still see my screen. Chiwe, do you took your profit? Let me hear that. If I have special interest in you, the way you have been following Boba to Boba, very soon you'll be traveling with us. You become, go take note of Chiwe. Chiwe is good. Chinelo is going to be come an anchor person for us over time because it's going to be uh, what do I call it? It's going to be a coup instructor, right? Because I love people who really want to understand, not to be deceiving the system, right? Aha. So, Gino, get ready. Very soon you'll become chief analyst for us, okay? You'll be analyzing the market better than anybody. All right. Sorry. Okay. So now let's go. So sorry guys. Just a moment. I think attention is needed. Oh, guys, I'm sorry. I was somebody is working on my car, and then so I'm sorry for that. Okay, so now let's go. Okay, so I was talking about the sessions. Now this is, you can see the market is not good today, but you can still find trade because you have tool. That's why I would say when you have mindset, tool, skill set, and tool set. So now London section open like this. So either I use indicator or not, you can check it. London session open by 9 here. This is the candle that opened London session until this 2 a.m. that this guy is open. So this is London high, and then this is London low. So good enough, London even tried a swept low of Asia. So London swept low of Asia. So if that is the case, the Asia, the New York, so the New York supposed to deliver, all right, because the markets go this way. So when New York, London swept low, then New York supposed to deliver go up. But this is the problem. Let's check the narrative. Yesterday, so you now have to check on the daily time frame. So yesterday, what happened? This was yesterday. Where is yesterday? Ooh, bad enough. Bad enough. Yesterday. So that means yesterday high was this. So let's take this. Bad enough. This was yesterday high. So bad enough. This was yesterday high. And then low. So yesterday high and yesterday low. So previous day high and low. So this market has swept previous day high. The overall trend is a downtrend. Okay. So with this market confused now, since we have swept this, now that means gold is still going to sell. But the little challenge you have is that before New York open, which is this two, where is the immediate high or immediate low? That's where we're going to have a challenge. Okay. So that means, I've told you that the momentum is bad. So it's either it should take London high off because the market is bearish, all right, or it should just induce the market and now take low of working on today and push back and continue to range too because the market is bad today, because maybe the market need to actually return back up eventually. So this type of market is a confused market, so you don't, you want to trade that are going to give you better result. But with your scanner, you can be taking trade and be fine. Okay. So now let's look at Euro USD that we have traded. So that could be better off. Okay. So if you look at Euro USD, oh God, I'm being disturbed here. Sorry, guys. So and I said if you use indicator so that I may not have time to plot it the way I plot just this one. Okay, now this is this. Look at this. This is Asia today. Funny enough, this is Asia today. Look at the range of Asia. Okay, this is the range of Asia. And then we have a London. So London actually manipulate, sweep the low of Asia, and then return back up. I think this should be previously high, if I'm not mistaken. All right. So now, if this market is an uptrend, so what's going to happen? We have the New York came in. So New York came in, massive. Where's the New York? Sorry. Let me take off this. So this is London. So this is the high of London. If this market retests the London low high, then our journey continue up. Remember, we have our market that is to continue ranging, is to continue moving up. So that means if I wait for London, New York to retest back and bounce here, we'll buy more. You buy more position. And if you look at it by structure on your 15-minute time frame, this is already a structure on its own. And if you look at this external, it's already a break. So that means a pullback, all right? A pullback probably into this FEG, that could be indication for buying. Okay. So if you take in your indicator, so look at it. So a pullback and retest the high of London is a continuation because this has actually what? Manipulate. And here, right, this was the immediate swing low before, if this one even take it out, that means it could create a continuation. Now, if you add up to your indicator, your scanners, and your support and resistance, can you see that? So you can see above the London, there you have, all right, there you have this. Above the London, here you have this. So we already have a market closes above. Now, this scanner have given you sell, but is it confirmed? No. So you go to 5 minutes, perhaps 3 minutes, perhaps, and a pullback into that region and bounce. So you're going to be buying. Without that, this does not close below. If it does, that means this pullback is going to bounce back to this point. You get it now. So go to 3 minutes, perhaps. Let's look at it. Okay, the 3 minutes already saying sell, but that sell is not a total sell. It's a pullback into the London high, except and if it's going to do that, it should be massive, right? Except and if it close back inside the range of London, then you say, okay, it's going to sell. Without that, if you return back to top of London, then you should be buying. Okay, so that means this sell will be a shallow sell, right? So you can see how and mechanically you trade the market, following sessions and all of that. So I always say when the market is not clear from the daily candle, no momentum, no direction, you try to avoid it and work on the one that clear direction. Oh, okay. Okay, so I want to be sure that many of you you took trade. How many of you took the trade we asked you to take on gold and you close the trade? How many of you close the trade in profit? If you close the trade in profit, just tell what. Some of us who have been trading since morning, we are highly disciplined. We may not, you don't necessarily take trade all the time. So most persons just want to be in a trade. Okay, Livebox, you took a trade. So those of you on the, okay. So that is it. So please, this is how we roll, and then taking trade, maximizing opportunity. And we have said if you want to independently be trading by yourself, you just need your mindset, your skill set, and your tool set. Right? Make sense? Okay, thank God. How are you doing? What's your update report for us? How have you been following your scanner, learning more, and applying it? Is it better off than before? Question. All right. Any clarification you can type on the chat box so that I can respond to you quickly before we shut down this session. Any query, any clarification at all? Does anybody have that? Any clarification, any comment, or what you are struggling with? So that's what it is. So if you go and check, like I said, gold, I think gold will say it swept Asia low. Then since the market is confused, so gold, ordinarily as they have swept Asia low, it should deliver to the Asia. So Asia manipulates. Okay, so let's go there and check. Final go. Asia manipulates. Why New York delivers. So let's go and check. So just like this was nothing. GBPUD. Now this is the one that come to now sweep Asia low. So if you sweep it properly and return back to the range, you probably say it should deliver to the opposite. So market can do that. So gold, let's look at gold. Gold may be buying. Let's check. Where's gold? Where's gold? Where's gold? Okay. You see, right? So gold is buying. So accumulation, manipulation, distribution. That's how the market works. Accumulation, manipulation, this is a sweep of Asia low, then the market should deliver. Now, it's just the poor movement of the market today. So you could see this market now could just go ahead, right? And then disorganized, what's it called? Let's take it up. It can go ahead and now disorganized uh, the high of London. So that's why when you are scalping it, you have taken your profit, you just allow it to run. So, but if you look at it, this is London high. If I take it this way, that could be a rejection or to just buy up as much as possible to the London high, right? Because today is supposed to be an expansion. Yesterday manipulated, right? So yesterday manipulate, yesterday accumulate. Now, so today's supposed to be an expansion, but what has happened is that it expanded to the high. So today could actually create because there's no momentum in what's it called in gold, and that's exactly what's happening. Can you see that? All right. So I think we have done noble, ladies and gentlemen. So those of us who still trading our Euro USD, look at the Euro USD. I've forgotten. I think was it Euro USD? I told her that if we pull back, it will continue to buy. Let's look at it in 3 minutes. That pullback, after that pullback, so this was the pullback. If you buy up, take out this high now, it's flying. All right. This is the advantage of why we trade in the morning. The best, if you want to enjoy your trade, come in the morning. Analyze your market, check the previous day high, low, and all of that. I'm telling you, you'll be fine. You'll be very, very fine. If you want to trade with rest of mind, I think that's what I've discovered. Trade in the morning, set your trade. Especially if you're a swing trader, just rest. That's it. Just rest. Okay? So thank you very much. I think I'll have to call it today. Congratulations for those of you who took the trade, and bye for now. Thank you.